dear students, we are solving one more problem on computation of income from salary. This is video number 17. I am Dr. Panduranganayak, Principal, SCS College, Bentwar. Let us go through the problem. Mr. Santosh is an employee in a company in Chennai. He gives the following information. Basic pay 20,000 per month. 20,000 into 12, that is his taxable salary, taxable basic pay. BA 10%, 10,000 per month, so 10,000 into 12. Then what is the significance of what is given within the bracket? 50% enters into Provident Fund. That means though DA is 10,000 per month, only 50%, that means 5,000 per month, that is considered for computation of amount contributed to Provident Fund. Entertainment allowance 400 per month, that is fully taxable, and you have to simply ignore the actual expenses. Whatever may be the expenses incurred, that should be ignored. But if the SSC is a government employee, then deduction is available under section 16. How it is? And the procedure is, okay, actual entertainment allowance received 400 into 12, and then rupees 5,000 or 1/5 of basic salary. Out of the three clauses, the value which is very less, that is exempt. So the deduction is available only in the case of government employee, I told you. But here Santosh is not a government employee, so deduction is not available. Entertainment allowance is taxable fully to the tune of 400 into 12. Actual expenses should be ignored. CCA is fully taxable. He received education allowance of rupees 800 per month. He has two children studying in a college. So here 800 into 12. That we have to take. So 9,600. There's two children studying in a college. 100 per child is exempt at the maximum for two children, and therefore 100 into 2 into 12, that is exempt. The remaining amount is taxable. Exemption is 100 rupees per child for 12 months, but for a maximum of two children. The benefit is extended only for two children. Hostel allowance, that's also taxable, but here only for one child. So 4,000 per month, 400 per month into 12 into 1. So it is 4,800. So what is exempt? 300 per child for 12 months for one child. So 400 into 12. 4,800, sorry, 300 into 12 into 1, 3,600, that is exempt. Interest credit, before that, he contributed 14% of salary to recognized Provident Fund with equal contribution from the company. Now here the question is, company's contribution to recognized Provident Fund. In a problem, first you have to ascertain whether it is a statutory Provident Fund or recognized Provident Fund. If it is statutory Provident Fund, whatever may be the contribution of the employer, that is company, entire amount is exempt. But here the contributions to recognized Provident Fund, any contribution of the employer up to 12% of the employee's salary, that is exempt. Anything above that is taxable. Here it is 14% contributed by the company. Therefore 2% is taxable. 2% of salary of the employee is taxable. Next, interest credited to recognized Provident Fund at 10% per annum amounted to 30,000. Here interest credited to recognized Provident Fund, it is exempt up to 9.5% per annum. But here it is 10%. That means half a percent of interest is exempt, taxable. But how do you calculate 0.5% interest? So At 10%, it is 30,000. So 30,000 divided by 10. 10 is equal to 30,000. What is 0.5? So 30,000, it is at the rate of 10%. So 1% means 30,000 divided by 10. So you will get 3,000. Half percent means 1,500. So 1,500 is taxable. So interest credited to recognized provident fund is exempt to the extent of 9.5%. Here half percent is taxable. So 10 is equal to 30,000. What is half? In other words, 30,000 divided by 10 into 0.5. That way you calculate. He also provided with a rent-free furnished house for which a company pay a rent of 78,000. So the question is, you have to decide whether the house is owned or hired. If it is owned, population is to be considered. But here it is not owned because company pays rent for it. So it is hired one. If that is the case, the perquisite value is calculated with the formula, that is 15% of salary or actual rent paid, whichever is less. 15% of salary or the actual rent paid, whichever is less. So we have to calculate. We'll consider that a little later. So it is totally rent free, nothing is recovered from the employee. If anything is recovered from the employee towards the rent, then it is called concessional accommodation. Cost of furniture. So in the previous part, it is the perquisite value of unfurnished accommodation. Now if it is furnished, so what is the perquisite value of furniture? So written down value is also given apart from cost of furniture. So you have to take cost of furniture, written down value should be simply ignored. They have given this value just to mislead you or to confuse you. Therefore 80,000 should be taken. Of that 10%. So 10% of cost of furniture. If nothing is mentioned, it is assumed to be owned by the SSE. If it is hired, actual hired charges you have to take. But it's not hired here. Therefore 10% of cost of furniture, written down value you have to simply ignore. Supposing they give cost of furniture including say laptop and computer, then that value should be excluded from the cost. But here it's not given. Forget about that. The company has given a car of 1.66 cc. 1.6 cc. That means this is a small car. Up to 1.6, including 1.6, that is small car. If it is the cubic capacity of the car is more than 1.6, then only it is considered to be bigger car. So you have to be very careful here. 1.6 and lesser than that, that is smaller car. More than 1.6 cc, then it's a bigger car. So it is used both for private and public purpose, official as well as private purposes, and therefore the value here is if it is small car 1,800. We are assuming that the expenses are borne by the company. So 1,600 per month into 12. If it is 1.8 cc, the value would have been yes, 2,400 into 12. Here it is smaller car 1,800 into 12. His car was admitted to a private hospital. His father was admitted to a private hospital and medical bill amounted to 50,000. Company paid 50% of this bill amount. That means yes, whatever amount is given by the employer, that you have to take. That is 50% of 50,000. That means 25,000. Entire 25,000 is the perquisite value of this perquisite. Earlier, it was exempt up to 15,000 if the treatment is in a government hospital. Private hospital. But now that provision is withdrawn. Now full amount is taxable. So 50,000 is given by the employer. Therefore entire 50,000 is taxable. During the year, Mr. Santosh paid 2,400 as professional tax. This will come under 80C, LIC premium 20,000, 80C, prepaid housing loan 30,000. So this 30,000 is the combination of interest as well as principal. So what is the principal amount? Only principal amount will come under 80C. So 30,000 minus interest of 14,000, 16,000 is the principal amount that is considered under 80C. Deposited 10,000 in PPF. So this also comes under 80C. Compute taxable salary and deduction under section 80C for the year 2021. Okay. So this is about the problem. We'll go for solution now. I have explained everything. Basic pay taxable, DA is taxable, entertainment allowance is taxable. But here one thing you have to remember, in certain cases, so only that part which enters into retirement benefit should be taken. Then I'll come to that. Entertainment allowance is taxable. Whatever may be the expenses incurred by him, that is immaterial. And deduction is available only in the case of government employee. Here he is not a government employee. CCA is taxable. Education allowance is 9,600. Of that, 100 per child for 2 children, 12 months. If you calculate, that comes to 2,400. That 400, that's exempt. Hostel allowance is 400 per month into 12 for 1 child, comes to 4,800. But exemption is per child 300 for 12 months. Here, of course, maximum exemption is available for 2 children, but since it is given only in respect of one child, so 300 into 1 into 12, so 3,600. Employees' contribution to recognized Provident Fund, so 14% of 2,40,000 basic plus that part of DA which enters into retirement benefits. And then if there is commission based on turnover. Here it is not there, only 2 items, basic plus 50% of a DA, that's 1,20,000. Totally that comes to 3 lakh. Of that 14% comes to 42,000. What is exempt? It's exempt up to 12% of salary of 3 lakh. So that is 6,000. So what is taxable is 6,000. Interest on recognized Provident Fund in excess of 9.5%. That means here it is 10%. So 10 is equal to 30,000. What is 0.5? In other words, 30,000 divided by 10, you'll get 3,000 into 0.5, half. So 1,500. Taxable rent-free accommodation. So first you have to calculate the salary and then you have to calculate the perquisite value of rent-free accommodation. The rule is here it is hired one, therefore the formula is 15% of salary or 15% of salary or actual rent paid, whichever is less. We'll take it up a little later. And furniture, 10% of cost of furniture, 80,000. So whatever is given within bracket, that is written down value, it should be simply ignored. So 10% of 80,000 comes to 8,000. Value of motor car, small car, therefore 1,800 into 12, 21,600. And driver's salary 900 into 12, so 10,800. Medical bill reimbursement, I told you, employer reimbursed 50%, so that is 25,000, fully taxable. Earlier, if the treatment is in a private hospital, that would have been exempt up to 15,000. But here it's 25,000. That exemption is withdrawn. So if you add up all these things, that comes to 4,99,980. Deduction under section 86, section 16. Standard deduction. Last year it was 40,000. Now it is 50,000. And then professional tax. That is 2,400, 200 into 12. So 52,400 is the total deduction under section 16. So taxable salary is 4,47,580. Come to deduction and ATC, very simple. LIC premium, housing loan principal repaid 30,000 minus 14,000. Provident fund contribution 10,000. Employees contribution to recognized provident fund, that is 14% of salary of 3 lakh 42,000. So 88,000. Alright, what is salary for rent free accommodation? Basic 50% of DA and all the taxable allowances like CC, entertainment allowance, then taxable education allowance, then taxable house rent allowance, hostel allowance, taxable hostel allowance. Okay, if you add up all these things, that is basic, 50% of DA, CCA, entertainment allowance 6,000, taxable education allowance 7,200, and yes, next one is taxable hostel allowance 1,200. So 3,19,200. Or the formula, actual rent paid or 15% of salary, whichever is less. So in this case, 15% of salary is 47,880. Actual rent paid is 78,000. So whichever is less, 47,880, that is exempt. Already we have included that in the salary salary income statement. Entertainment allowance is taxable. It's not deductible from gross salary, as deduction is allowed only in the case of government employees. So thank you very much.